Mission Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman. This is the Wednesday edition, Wednesday the 13th of June. I'm just struggling here. I'm very slow on the connection here, and I had everything set beautifully. There it goes. Okay, charts are up. Well, it'll be up in a second. Sorry, Al, my wonderful engineer, trying to get me on course here. Talking about on course, I'm looking at my window, looking at some beautiful, beautiful ships at the Newport shipyard, little vacation, and I just love seeing these boats. They're beautiful. They're absolutely stupendous. A whole bunch of British boats, so there must be some kind of race they're preparing, I think. Later on in the month, the America Cup is going to be held. So just a little bit of a break, and I'm doing this all remotely. And I'm hoping that all the charts just show up. I understand it's going to be slow, but they are there. So what's really important as far as I'm concerned is that when I went through on my Friday edition, my Friday all-day webinar with the attendees, and I really enjoyed it, I must say. I sent out just a bunch of work to peruse and go through and study, and then we followed up on that on the Friday. And most important, as far as I'm concerned, is that we were looking at monthly charts, and I'm going to take a moment here. I'm going to start off. Actually, let me start off the way I should start off, and I'm just going to run down. The Dow is down 8 at 12,564. The S&P is up 1 at 1325. The comp index is up 4 at 2547, and you've got gold up 8.5 at 1622. Silver's up 16 cents at 28.95. Platinum is up 15. Excuse me. High grade copper is still way down at 333, down 5 cents. Crude oil is up 41 cents, and most important is that bonds are unch. So I want to go through these, and I want to discuss what we were looking at, and then I'll go into the nitty-gritties. And before I forget, let me write down. Arch had asked me about the stock is AMRN, and I'll get to that in a moment. So 877-927 is the number to call, and this is what I'm looking at. 1-877-927-6648. So, with the Dow down 15 points, holding the 9-period exponential moving average on the daily, I'm going to move over. It'll be a little slow. I'll get there. But I'm going to move to the monthly chart, and I'm going to explain what I'm looking at here. One of the reasons why I'm somewhat concerned, what we've been doing in my opening call is that we took profits in some of our core long positions, very nice profits. And we have a core short that we've had since March, and that's doing very, very well. On the downside, that is. So as it pulls back, so we make money because having shorted, you buy it back hopefully at low prices, and so far it's down about 20%. So I'm making a very determined effort to be able to try as much as possible to be able to pick out the stocks in the sectors that I think are now starting to weaken, that were the strongest, that are now probably the ones that are making what I call a hat-trick top. Now, what is a hat-trick top? In cricket, you get a hat-trick top, and you get in other sports as well. It's been 3 different things when a trio of events occurs. In this particular instance, when you look at the monthly top in the Dow from the 12,876 high back in 2011, that was last April, and then it pulled back to the 10,404 level, ran back up to this last high of 13,338. If you're looking at Tiger TV, Tiger 1, this is also archived. It'll be archived in Tiger 11. Have a look at the verticality of the technicals. When the Dow ran up to the April high of last year, April-May high of last year, the MACD made this huge arch formation. Anybody know about those Grand Prix races? You know, the Le Mans, you have that huge, before you get hairpin bends, you get this huge turnaround. And then what happened is that the fast-moving average, that yellow line, crossed under the red line briefly, then flattened out, and then ran up again and made a lower high. The fast-moving average went to a lower high, but the slow-moving average has in fact gone to a higher high. That's a divergence in the technicals. It's saying that the look-back period, the differential, the 9-period differential, is now weaker than it was at the previous high, previous major high, I should say. That's number one. Number two is when you look at the MACD, the verticality underneath it is the stochastic. This is a slow stochastic, and you'll see the yellow and red lines below it. That is showing you that the stochastic went up to the 90s, 95%, pulled back sharply to about 58%, then ran higher, and on this last run couldn't hold the high as it had before, and it's pulled back negatively as the fast-moving average, the yellow line, is now underneath the red line. It might be a little tiny. I'll take a chance here. I'm going to open it up a little bit. Here we go. Open it up. It'll show up in a second. Now, even more important is the green line, the on-balance volume. That green line that you can see, that made a top one bar before the high that was made back in 2011. And this particular instance has also pulled back one bar before, 1 month that is, before. But the stochastic is still at 87% in the monthly. So far, all I can say is that there are signs, technically, that this last rally didn't have the strength of the previous rally. But right at this particular point, on the 13th of June, the technicals have not yet crossed negatively. Where would they cross negatively? If the fast-moving average of the MACD drops sharply, makes a wide beta between the wide differential between the slow-moving average and the fast-moving average, that wide space, that little V that'll be created, that'll be a big negative. And the stochastic at 87% would say, wow, the Dow really has to drop to about the 11,800, and right now it's at 12,556. Probably it would take that amount of a number of points for the stochastic to go to the 79% area. So, monthly says, be a bit cautious here. There are signs. The signs are nothing like the signs that were in major drops like in 87 or 2007. But they are certainly something to be aware of. And right now, the stochastic, the 9-period exponential moving average, that white line, which has been tremendous support, and last month we closed under it, the Dow closed under it, that's round about where we are right at this moment at about 12,560. We're at 12,558. Okay, so that's that. Now the weekly chart. The weekly chart says, in looking at all these different time frames, and it's just going to be a little bit slow. It'll come up here, don't worry. You can still see just in this section here that I highlight. Remember, for those of you new to this, the chart on the right is the monthly, always in my work. The chart in the middle is the weekly, and the chart on the left is the daily, and this one in the middle that I often bring up is the 120. I'm just going to get rid of that for now, because the 120-minute, while important, is really not the purpose of what I'm discussing right now. What it's saying is, oh, boy, I'm going to mess this up. Give me 1 second. Okay, I'm going back to the weekly chart. This will suddenly pop up in a moment when I least need it. But you see this dashed line in the weekly. You see this arch formation. You see this left side. There it is. Let me just get rid of it for now. And that's at 12,704. In the 120-minute chart is a 200-period exponential moving average, which is attempting to target. And then now I'm just going to get rid of this. Okay, now back to the weekly chart. It'll show up in a moment. This weekly chart has a couple of patterns that I'm looking at that are really important. One is that the arch formation that's formed is really just a guide. It just says, you know what, in the work that you've done, what seems to have worked consistently, especially for the past many months, has been when you've made an arch formation, you've drawn the arch formation from the left side to the right side, and it gives you at least a guide that says, if certain levels are broken, absolutely this is what you've got to be looking for. Now, I seem to have lost the green line here. I don't know if I even want to get to it. Wow, this has gone slow. Anyway, it's the way it is. It just, I don't know what it is with the connection. I'm on wireless. I'm on I'm on the internet. I'm doing all sorts of things. But, okay, there you go. Now, this is really important. You see this dashed line here? I call it the ChapmanWave inside wedge. We were looking at this pattern a lot on Friday. And one of the reasons was I showed so many charts that had them, especially in the New York Stock Exchange, just many charts that were very key to the market. That said, monthly charts were kind of deteriorating. The price had held up okay, but the technicals was something to watch. So therefore, the middle chart, that is the weekly chart, is the one that says, all right, what is that telling us? Because when the daily chart takes a sharp hit or has a very sharp acceleration, very often it's the monthly that is impacted, and the weekly technicals take so long to correct that you have to wait a while. And that's exactly what we're looking at here. That the weekly technicals of the Dow shows that the stochastic has made a nice turn from the downside to the upside, but hasn't yet crossed to the 18, the slow-moving average, hasn't gone to the 20% or higher level. It's only at 17%. The MACD is attempting to flatten out. That's that. There you can see the chart, the red line, the yellow line. It's attempting to flatten out. That the fast-moving average is slowly, the histogram, the vertical lines inside, are slowly diminishing a little bit. But you have to see that, and it takes a while for that to turn around. That'll take a couple of weeks, or an incredible move to the upside for this fast-moving average to cross positive above the red line. So far, the weekly chart is still acting very poorly technically. The price action with a 9-period exponential moving average just above it, about 12,005, I'd say that's probably 12,570s, hasn't been pierced to the upside. And look at this. When you're looking at the price in the price movement from the low that was made this past week to the high that was made yesterday, it has attempted to break above the 9 EMA, but so far it hasn't. So it's used up a lot of energy in this move, but thus far, and the week is still to go all the way through to Friday afternoon at 4, thus far all we can say is it's a very strong turnaround from a new low. Not yet, or it wasn't up until yesterday, wasn't a new recovery high, but you've made a new recovery high. And I could even go so far as to put in, well, this is taking a chance. I don't know if I can do that. Everything seems to be frozen here. I could even put it in A, what I call a gray A. Give me 1 second, it'll show up. There it goes. Okay, I'm going to type in A. I'm not going to be able to make it a gray A. In other words, I change the color and I say, while it is underneath the 13,338 PT sharp and most important high bar, this has to be considered a retracement rally failure mode. That's just an explanation. It's not saying it's failing, but it's underneath the previous high. So look.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, and this is the Tiger Technicians Hour. Dow's down 5 S&P's unch. And I wanted to go to the chart. This is where I show my subscribers every day. In our positions, actually, we are a lot in cash. And we have a core short. We added to a trading short. We have a trading short that we started yesterday, I believe it was. And we are also long, and that's kind of the way I want to look at the market. I want to be long stocks that are showing internal strength, independent United States strength. In other words, stocks that are U.S.-centric, not looking at the foreign market, that have no real connection at this point to the foreign markets, kind of independently holding up when the market's pulling back, moving nicely like today, moving up strongly when there's any sign of strength. That's kind of what I want. On the downside, I want the exact opposite, a stock that is just hardly moving to the upside on a percentage basis on any big rally, but in fact starting to pull back. So that's kind of the areas that I'm looking at. And I just right now I'm avoiding the indexes to go long or short the index, because what I discussed a week ago is that I believe that June is going to be an incredibly whippy period. And on Friday I was showing the reason why I thought it would be whippy, and why that monthly chart, the tide of the monthlies, are going to be so important in terms of certain levels that have to be held or broken to the upside. I don't mind. You break the upside, I'm there. Now, what I'm looking at here on the chart of the Dow, and this is kind of important in terms of the patterns, you see the arch formation at the top going to the 13,330 high, and you see the sine wave, almost the exact same cup formation that's being formed right now. That says that there are a number of chart patterns and I've kept these chart patterns. I show subscribers every day because I discuss these. You see the green and the red line? That's the inside track, ChapmanWave inside track in the channel. The channel goes to the outer point, and there was a green line there and a red line there. The reason why I took them off is that they're now unnecessary. I just wanted to keep it to show the study that we were going through. Now look what's happened. You've had almost a little doji bottom at 12,035 on the 4th of June. And almost an inside candle, then a huge move up. That says that I drew in these channels way before the move. I already drew these in back about a week ago, that there was a potential for an up channel inside track there as well, red and green, and here, red and green. And what it does is it says, these are the parameters that you're looking at. And they are usually coming off some kind of a low. There are usually three fighting patterns. The one is the pattern that says you could make the dreaded H, that lowercase h that I always talk about. There was one that was formed right over there to the peak B minus back on the 6th, I think it was the 6th of June. It couldn't have been the 6th of June. How could that be? Oh, that's a chart underneath there, back in the 29th. And then what happened was that the 9-period exponential moving average, that red line, became very important, plus the gray line, which is a 200-period exponential moving average. Now look what's happening. You've gone to peak A. The diamonds made a parallel high, so they're only at peak A right now. Now we're in the Dow at peak B, with 12,650 as the high to take out. What's important is that the candle of yesterday and today says that if there is internal strength, then the up channel is fighting the pattern of the dreaded H, which also, I don't want to make it too complicated, is the inverted falling axe formation. So there are really three competing technical patterns. They together make a fourth one, and that is the cup formation, the left side, in this case from there, to the right side, which takes you to about the, I can't do it right now for some reason, charts are freezing up, to that green line edge, which is 1, 2, 3, 4, 5, and about six, 7 sessions. And that would take you to the previous high, around about 12,710. If it's going to fail, then the H pattern is going to be successful. So this is really easy for me. Dow breaks into the 12,651. I have to think that 12,710 to 12,750 will be an upside target for this particular move before we start to look to see if there's going to be a failure pattern. The Dow fails today and starts to take out the lows of today, which is 12,498 in the Dow, and you've got to say, hey, there's a pattern that I'm looking at, which is the dreaded H, because 12,450 would be the 9-period exponential moving average. You take out the lows of the previous 2 days, and all of a sudden you're looking at coming back down very sharply. So we've got a break coming up. I want to get that down. I'll take the next moment to go to my new charts, and then we will look at AMR and Amarin for art in New Hampshire, art in the desk. We're right back straight after these messages. Basil Chapman, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. A little slow creep in the market. Yeah, the buy so far, the last couple of days, other than that big smash on Monday, has been to be buying the dips. And to me, that says there's still internal strength, and that's why on Friday when they're doing the Master Trader Series, the all-day session, I was saying the dailies are in conflict, and I'm going to go with the dailies to see if the dailies can move the market higher. Will that change the weekly charts? Will it change the monthly charts? Well, we won't know yet, but there was a dichotomy in the strength of the near term, and so far that strength has been within a trading range. That was that yellow block that I was showing earlier on in the Dow, that there's this trading range, and I still believe in this market you could be looking at the long side. There are some stocks that are doing very nicely, very quietly, and I like that. And one stock here that's very interesting is Amarin Core. I think they're biotech. I can't remember now. And it was once 1,425 the stock, and it did pull back a bit. Went down to the I can't remember now what it went down. So I'm not going to move my charts, but I think it went down to the 3s or something. So the question is, what if someone is holding this position, what would they do? Well, the 9-period moving average. Right at this particular point is at about, I'm going to have to wait for the chart to update. Yeah, right there, $11.50. It's trading at 11.75, up 22 cents. This is what I mean, that this is a very interesting market. It's a deceptive market because within the current there are these eddies and there's this flow of little riptides for some stocks, and other stocks just seem to be ignoring everything. And this one has been in a trading range. It's making an oval pattern in the weekly chart, and that says, if it's able to take out the high, oh boy, I'm going to touch my chart. This is not so good. Let's see if it works. I'll do it visually. There we are. The high of 12.20 that was made on the 7th of June, and it's 11.74. If it's able to do that in the next 2-3 days without taking the low of yesterday out, if it takes the low of yesterday out, I would even say that even if it trades under the low of yesterday, which is at about 11, I'm guessing now, 11, say 15 or 17, if it takes out the low, I would say be careful. Even on a short-term trade, I would be getting out of it. If you're looking at it on a weekly basis, that's a different position. So if you've got a small position, I would make the stop there much wider. I'd give it a stop of about $10.85. I wouldn't give it more than that because that's going to start changing the weekly, because 11.13 is the 9-period exponential moving average support. Then AMRN, it's at $11.72. Now, this is very important because it's holding nicely. It's trying to walk the 9-period moving average in the daily, but it has in the weekly. And the MACD is still strong in the weekly. The monthly I'm not going to talk about because it's not a great chart at all. But the daily says, if for some reason on Friday at 4 o'clock, it's able to trade and it's able to have traded and closed above $12.16, $12.20. That really is good action, and it'll give you some kind of support. Now, where would I add? If that's the question, I have to say here, I'd start off with a small position, and I would only add if by today's Wednesday, Thursday afternoon, if it's trading at $12.06, I would add a very small position, but that position has to have a tight stop of, I'd even make the stop 15 cents because it's got to work into Friday and into Monday. Why do I say that? Because there's a chance that it's making two U-shaped patterns in the daily, and the consistency of these cup formations in the weekly says that the pattern is that Roman candle from 3 weeks ago, the wick, that inverted Roman candle, if it can trade, I'm going to try to do this again. If it can trade in the, will it come up? Yes. If it can come into the $12.20 area, even if it just trades there briefly, it says that the wick of that candle suggests that it might want to test the high of that candle. And I'm just going step by step. It makes the oval pattern, which could be the ChapmanWave leg, oval body, and neck formation. So that's it. Make it real simple. If it's just a small position and you're looking at it, looking out, using the weekly chart, closed under yesterday's low, so just be a bit careful. But you can give it a bit more room. But if it's trade, I'd get out of it. On the upside, if it breaks above, that's very, very important. Now, WFM, in the den, Reed said that WFM had made a round number high. I've got just a slew. In fact, I didn't recall seeing this many round numbers in charts that I've been looking at. But what's important about WFM, if you look at the weekly chart, you see the way it's walked. This is Whole Foods trading at $90.68. Down 63 today. If you look at the monthly chart, there isn't anything negative yet in the monthly chart, and it's trading way above the 9-period exponential moving average, which is at 80.63. And it's trading now $10 higher. So that I have to exclude as a negative. Now the weekly chart is moving higher, but the stochastic is only at 64%, and the MACD has a chance to deflect lower. I'm going to be watching this really closely, and this is leg F in the weekly chart. So that says, okay, be careful. You're looking at the weekly chart, and that weekly chart says, up until now, you can go until Friday at 4 o'clock, but you've got to keep keep your eye on the fact that if it starts to pull back 87, if in the next 5 to 7 trading days, it closes under 87.34, that's 3 points lower, that'll be a negative in the weekly chart. The daily chart is in leg A, B, and a parallel overlapping wave C, which didn't go all that far. It went to D, and D was that round number. Let me just double check. Oh, it's coming in now. 1, 2, 3. Let's go. This is really one of the slows. Here we go. 92 round number high. If WFM Whole Foods takes out that round number 92 high, and especially if it closes above 92.34, it could still go higher. But the candle that we're looking at now says, be careful, there could even be a trading band, and the trading band says that the 88 level, 87, the low of today, I can't see what it is. Let's call it 87.80 to the 92 level. Well, it could even go to 93.25, 93.5. That's going to be your trading band for a little while. That's what it looks like right now. So I got that, and now we've got Ari online. Hi, Ari, how are you?
Pretty good, Basil. I'm trading WPRT.
Okay, it's coming up here. Here we go, WPRT.
2/3 of my position.
Okay, give me 1 second as it comes up. Well, it might be more than 1 second. There it goes. Okay. Oh, now you remember the pattern that we were looking at, and I said that the resistance at 31.58, that 200-period moving average, folks, we're looking at Westport Innovations, Inc., and it had a high of 50.19 a few months ago in the monthly. The weekly chart that was peak E came down almost to the 200-period moving average. So I'm sorry, you said you've got what's left in your position?
Yeah, I sold 2/3.
Okay, well, I think your timing for the sell was very good. But one of the aspects that I'm looking at is the stochastics at 80% and the MACD is still expanding. So it says, yes, there's still some internal strength. But the pattern that I was looking at, remember that I call the snail pattern? I even drew it in. It had the shell that went back to the 22s twice. That was the test. Then it broke out and it went to a higher high. It has closed above the previous peak A high, so that is A minus. This is a brand new peak A. I'm going to say to you that your position that you've taken off, that's good. As long as you keep a third, and the 1/3, I would have a stop. Probably you're looking at the same level. If it closes under 28.21 is the 9-period moving average, but that's not as important as if it closes under 28. That would start to change even the weekly and say that is probably just a single leg A up, and it could be a failure pattern. So the 1/3 position that you have right now, what you want to see is for it to go to I'd even say 30.06, somewhere around there, preferably 30.15 to make just a new recovery high from the high of yesterday. Now, that would be very important because it says that all of a sudden the magnet of the 3150s, that 200-period moving average, is going to be strong. I don't really see any reason why you should have your full position, so taking 2/3 off I think makes the most sense right in this particular market. And the other aspect that's really important is it actually went to EF. I'm calling it a G in the 120-minute chart, and it's pulled back quite sharply. So the 120-minute chart also concurs that if it breaks under 28, you've got to be careful because it could quickly go down to the 27.30s. But there, the 30.39 200-period moving average is really strong. So I like the fact that you kept 1/3 of your position on. But I don't think I would actually add to the position at this point because what you really want to see is that WPRT needs to close at about 30.28 to 30.33, somewhere in that area. It needs to close there and show that the technicals are really holding it very well, because then it's going to try to climb. Now, the other aspect that I also spoke to you about was if it breaks above 31.58, above the 200-period moving average, you've got to expect for that to turn into support, that it's going to go above and then come back and retest. It's the retest coming up by Friday to Monday or Tuesday of next week that's going to be really important if it does break above it. So I think you're very well set. I got a feeling that this month, the weekly chart is saying, be careful because if it breaks under that 28 level, it could actually just go into a trading range and start to slide to the 26s. So it's really it's for it to prove to you that it's got the strength to go to the 31.58 level, and I think having just the 1/3 position left is exactly right. But actually, I keep it on my list. I'm watching it closely because the steepness of the weekly and the monthly chart, the decline, says that probably at some point in late June, maybe early July, there's a chance it's going to test 20.94, and I would say if it broke underneath that, that would be very negative. So the evidence is right there for it to prove itself. So congratulations on the first trade, and now let's see how the last one-third goes. Thank you for calling, Ari.
Thank you.
Thank you. That was Ari and Arcadia, and we were looking at WPRT. Now, here's something that I want to do. I want to look at, I'd spoken about the volatility index. I wonder if I can get this up now without creating some kind of a problem. Okay, here we go. The VIX index, which is about to come up, has risen today. Even when the market was rebounding, it didn't really want to show any strength. Wow, you've never seen my charts this slow, but that's just... I didn't have a chance to refresh. I was just afraid that if I refreshed and I wasn't able to restart my office computer, I wouldn't have any charts whatsoever. So let me see. Is this coming up? VIX. .x. Yeah, okay, here we go. Let's see if this is going to be correct. If it comes up, I'm going to show you something very interesting. And another reason why, as long as that, I'm sorry, I don't consider this part of the dollar, the euro, or anything. It is part of the intensity. There it is. You see how the VIX is holding in the, having made a left side, right side price time match 3 days ago. It's run up to a new A, and it's holding above the 9-period moving average. It's holding above the 2192 200-period moving average. As long as this volatility index is in the low to mid-20s, I have to consider that selling pressure is going to be maintained and not contained. And if it's maintained, the weekly chart says, be really careful. The pullback to the low on Monday morning when the market spiked up and then plunged to the downside was a little bit of an aberration, having gone just under 20 for a brief moment. I think it hit 19.87 or something. So that says to me that the 9-period moving average in the weekly chart, I'm going to try to get this a little clearer, that is really important, because if by Thursday or Friday, instead of plunging back under 20, remember, VIX, the volatility in under 20, to me, that is buying pressure. You will see the market pushing high. You see the Dow starting to go to the 12,700s. The S&P will be moving up. It's at 1323 right now. I suspect it could go very quickly to the 1344, 1346 area. But if this volatility index, which represents to me, my interpretation is selling, intense selling, that says if it goes back under the 200-period moving average in the weekly, which is at about let's call it 2337, 2340, and right now it's at 2337. If the volatility index on Friday is up in the 24, anywhere in the 24 to 25 area, that's going to say upside is limited. Got to be careful because the downside could come very quickly. That's the way I'm looking at it. In the mid-20s, volatility index says selling pressure is still there. Volatility under 20, and you're going to be moving higher. So I just wanted to clarify that. And now we also, if I'm going to try my very best to do this. I want to go to. I'm going to go to the June contract. I just haven't updated yet the notation on the September, and I believe it's still active, and this will be the bonds. I'm going to USM instead of USU, but the chart pattern should be the same. We've got a break coming up. It'll give me a moment to get that chart up, and then I want to talk about the relationship of the three bears, Vixie, Bondi, and Dolly, to the market. I'll be right back after these messages.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find is an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, everyone. Basil Chapman. We're back Wednesday, the 13th edition. I will not be here Friday. I'm taking another day off, and then I'll be back regular time, as always, on Monday, Wednesday, Friday of next week. Now, don't forget, today being Wednesday, Larry Pesavento comes up next. Should be a fantastic show, as always, with Larry. Then you got Dave White at 3 o'clock, great technician. And then 4 o'clock till 6, the market wrap-up with the one and only Tom O'Brien. So, and don't forget to go to the front page, check out 7 workshops here at TFNN are free. Go and check out what you can do to get those. That is something very special. And I'm doing one in August, I think it's the 15th, and that is going to be on the buy signal, but I will probably be adding some other things to it because at that particular point it's going to be a very important workshop in terms going to the August period, because that's usually a very important time in the market, time-wise. So let's just go through this. Bonds right now are up 4/32. What's really important about this chart that I'm looking at, and this as I say, the contract will be finished pretty soon. This is the June contract. I just didn't want to use something I hadn't updated. The MACD and the stochastic of the weekly chart are still really strong. So if bonds were to break, they would have to break under 144. That's 3 points lower. They certainly could do that, but that would say to me, okay, things have changed now. But that would have to have a commensurate rally where money comes out of bonds, goes into stocks. I don't see that right now. I see bonds having a pretty good pullback from the recent high. That was the high back. It was 150, I think it was 154. Or just missed 154, it's 153. So that recent high that I'm calling a peak F in the ChapmanWave methodology, with the MACD and stochastic pulling back very sharply, has seen a price movement to the downside, commensurate with the weakness in the technicals, but the price is actually holding really well from the low of 3 days ago. So if it starts to take that out, if the one is at 148 right now, closes under 146, and then you got to be saying, oh, okay, this is something different. But at this particular point, we could go sideways. Now, if bonds all of a sudden start to climb, and they go, this is the June contract, if the June contract closes, or whatever contract you're looking at, doesn't matter, it would be the high of 4 days ago. If it breaks above that high, and the market starts to pull back, Dow pulls back to the 12,430s and the S&P down to the 1312 area or lower, then all of a sudden we're looking at something that says, hey, the bonds have just consolidated here. You've got to be very careful. So those are the parameters I'm looking at. Volatility index, the VIX index, under 20, buying pressure. I didn't want to get into the dollar. It's just in a trading range right now. The euro is in a trading range. But most importantly, I'm focusing on the bonds. I'm focusing on the VIX. The VIX goes above 2480, 2520, that resistance. This market will have a very tough time. So I've set my parameters, and I actually love this part because you can be very independent. You can have stocks that are holding well, that have the potential to go higher, and you can have stocks that are very weak and no rally has been able to help them, and they just show absolute lack of upside energy. And I think that that's a very good way to trade this market. As far as the indexes are concerned, I believe it'll be next week where we can start to look at the indexes as bigger moves. In other words, if you want to go short, then you can go short the Dow or the S&P or the Qs via the inversion, the bear funds. But in this particular point, I think we need to look at this as a trading range unfolding, had a very strong rally, parameters are clear, Dow closes above the 12,000, 655 area, immediately 12,700 has become a target, Dow closes underneath 12,400, 420 to 12,400 in the next 2 days, and I would say that a chunk of this rally has been completed. So that's about how I'm looking at it. Cautious, very cautious here, mostly in cash, selectively long, selectively short, and that's the way I'm fading out here.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based